What if I told you that buying just one single share of Tesla every month could quietly build you a fortune, without trading, without timing the market, and without stressing over daily price swings? Sounds simple, right? But here's the twist: the real impact isn't what you think, and the final number might shock you. Stay with me till the end, because what happens in year 5 will completely change how you look at investing forever. Welcome back to the channel. Today, we're breaking down one of the most powerful, curiosity-driven investing ideas ever. What really happens if you buy one share of Tesla every single month for 5 years? No shortcuts. No hype. Just consistency, discipline, and the surprising math of time. Let's begin. 1. The psychology behind one share. Buying one share sounds small. It feels almost too small to matter. But that's where the human mind gets tricked. Our brain is wired to think in big actions equals big results. But in wealth building, it's small actions done repeatedly that produce unbelievably huge outcomes. And Tesla is the perfect example of why. Because this is a stock that has exploded, crashed, recovered, and then exploded again. Imagine buying only one share every month during all of these cycles. No emotion. No fear. No panic selling. What would that actually do to your wealth? Let's break it down. 2. Starting the journey, month 1. You buy your first Tesla share. Simple. Maybe the price is high. Maybe it's low. Doesn't matter. You have officially entered a rule that many investors never follow. Consistency beats timing. But the magic doesn't begin in month 1. It begins when life hits you. 3. When Tesla drops. Picture this. Tesla falls 20%. Everyone on social media is panicking. Analysts are predicting doom. People are selling at a loss. But you don't care. Why? Because you're buying one share. Just one. At a cheaper price. This is where dollar cost averaging quietly starts working in your favor. Every time Tesla dips, you get a discount. Every time Tesla rises, your previous discount becomes a profit. It's a psychological hack. You stop fearing dips, because dips become opportunities. Your mind transforms from a panicking trader into a calm long-term investor. 4. When Tesla explodes up. Now imagine the opposite. Tesla suddenly jumps 30% in 1 month. Everyone who sold earlier regrets it. Everyone who tried to time the bottom failed, but you're smiling, because you still bought one share. Even at a higher price. Your average cost moves slowly, steadily, naturally. Your emotions stay controlled. Your strategy stays on track. You're not chasing Tesla. You're collecting Tesla. Like digital rent. 5. 1 year later, 12 shares. After 12 months, you now own 12 shares. But something interesting happened during this journey. Your cost per share is probably not the same as Tesla's current price. Because some months you bought high and some months you bought low. Your average cost starts forming a shape that protects you from volatility. Most beginner investors fail because they buy once and panic. But you bought 12 times. You survived dips. You captured rallies. You're becoming a disciplined investor without even noticing. Now let's fast forward. 6. Year 2 to 24 shares. The compounding effect begins. By year 2, something new enters the picture. Compounding. Not the kind of compounding where Tesla pays dividends, but the compounding of your consistency, your average cost, market cycles, and the rising long-term trend of a strong company. Tesla might still be volatile. It might rise, fall again. But your strategy remains the same, and this simple consistency, just one share every month, begins to outperform people who are stressfully trading every day. Because you're not trying to time Tesla, you're building Tesla. Piece by piece by piece. 7. Year 3 to 36 shares. Something unexpected happens. This is the year most investors quit. Life gets busier. Bills increase. Market dips scare people, but the investors who keep going, those who buy one share every month no matter what, begin to notice something unbelievable. Their average cost becomes almost unfair. Volatility stops hurting them. It starts helping them. If Tesla rises, they profit. If Tesla crashes, they buy cheaper. It's a win-win scenario, created by one simple rule. Don't break the chain. By year 3, most people realize. You don't need to be rich to invest, but you do need to be consistent. 8. Year 4 to 48 shares, momentum builds, 48 shares. Almost 50. You didn't buy them in one day. You didn't save up thousands at once. You didn't gamble. You quietly built a position that many people could only dream of. And here is where the mental shift explodes. You're no longer thinking like a beginner. You're thinking like a true long-term investor. Your confidence grows. Your patience strengthens. Your emotions disappear. And here's the best part. At 48 shares, even small Tesla price movements create big dollar changes in your portfolio. You feel the power of accumulation, but nothing, and I mean nothing, prepares you for year 5. 9. Year 5 to 60 shares, the wealth curve appears. This is where everything changes. You now own 60 shares of Tesla. At this stage, your portfolio doesn't grow in a straight line anymore. It grows in a curve, because every rally impacts a bigger number of shares. Every dip allows you to collect more shares at a cheaper cost. You have a powerful average price, a long investing history, extreme discipline and momentum behind you if Tesla rises even modestly over these 5 years. Your gains multiply because of your consistent share accumulation. If Tesla skyrockets, you win massively. If Tesla stays flat, your average cost still gives you an edge. If Tesla dips, you're still collecting. This is why long-term investors outperform short-term traders. Not because they're smarter, but because they follow a simple rule with extreme consistency. 1 share. Every month. 5 years. And now, 10. The final surprise. Here's the truth no one tells you. The value of buying 1 share every month is not in the number of shares. It's in what the journey turns you into. It makes you emotionally stable, consistent, disciplined, long-term focused, immune to fear-driven selling, and confident in your financial future. By the end, you don't just own 60 shares of Tesla. You own a new mindset. A mindset that builds wealth automatically. So the real question is, are you willing to stay disciplined for 5 years? Are you willing to ignore the noise? Are you willing to buy just 1 share every month, no matter what? Because if you are, then your financial future may be far stronger than you can imagine today. Thanks for watching. Hit like, subscribe, and drop a comment saying, 1 share challenge accepted. Let's see how many future millionaires we have here today.